Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So welcome everyone to Midweek Software Strategy Session. Today is the 17th. And of course, as soon as I'm going to start the webinar, my daughter's guidance counselor calls from the high school, which is possible to get these people on the phone. So you got to take the call. Just questions on transferring the scripts from California to Florida. In any case, let me share one other screen before we get into this, because I think this is going to be real important for everybody to make sure we get the word out because at some point these Zoom logins and all this other stuff is going to completely go away in regards to the new AP Live. So if you're new and you haven't heard any of these announcements, we're scrapping everything, which I think is phenomenal. So we're blowing out YouTube, Vimeo, Zoom, all of the Telegram channels, and everything's being migrated over to a platform that we're going to completely control, that we own, and that we can manage to our expectations without everybody sort of running around ragged in different types of fintech software and or social media to get the word out. So this is actually a pretty big undertaking that I know that Bill, Josh, and Chris have put a ton of effort into, along with Susan. So if you're not familiar with this and you're not up to par, I would highly suggest taking a look at this launch call. If you need to watch this a couple of times, so be it. I'm going to have to get up to speed on this, hopefully, which has been my biggest complaint, and pretty much anybody, is that we want to try and herd all of our brand new subscribers to a centralized platform, one where they don't necessarily have to subscribe to my Telegram channel or any of the AP corporate stuff or some of the software developers, that it's already going to sort of be logged in, right? Which is really cool. So hopefully that'll drive participation much higher to all of the different stuff and allow us to have full control over all of our content, which I think is absolutely critical in this day and time. So switch back over to Forex Factory screen. All right, so Q&A window is open. If you have any questions, the chat window, if you want to post anything for the greater good of the group, which I stress the greater good. Let's take a look at the markets. So first time we have had some sell-off in equity markets. I don't think this core sales helped at all. Actually, this number's a little more negative than thought, obviously. No surprise, maybe everybody isn't coming back and buying stuff immediately. But looking at the rest of the week, Chairman Powell speaking today, so just be aware of that. Certainly could add fuel to the fire, which is pushing equities down globally today. No surprise, we've been on a complete lift for almost a year and a half. We should expect some correction, which we're beginning to see. And also, there's a whole bunch of NZD related monetary everything. Okay. So if you want me to take a look at a particular currency pair, I'm going to glaze through a lot of these. I've spent an inordinate amount of time, in my opinion, on all of these currency pairs over the last few months. If you want to see, because not a lot's really changed, honestly. But if you want to see any changes, you could spend some more time watching some of my previous discussions, especially the focus I put on this on Saturday calls. So broad markets, take a look at the this is just the future space. I want to see this on an hour, or not an hour, well, I guess hourly for trade in the short term. I want to see this on a daily chart, and I want to see what the charts look like as a whole, so I can compare them to each other. So we can just see sell-offs in equities, as you can see, a little more pronounced in the Japanese stocks. Weakness, obviously, in energy. Same thing with metals. We've seen this weakness here, with the exception of late. These are daily charts. Gold ticking back up, but generally weakness in metals. All the way back down to bonds. A little more strength of very recent. Okay, I think this is that safety trade they talk a lot about. Dollar strong. We're back up near the highs we've seen, very much near the highs that we've seen, and everything else is in a lower situation. So breaking that down, just the DXY here on a daily. Again, we haven't seen this area that we're certainly have quite a chunk of resistance against at this 93 area, but we're right up against touching it again. Be interesting to see what plays out. Could be nothing. Typically the last 2 weeks of summertime and or fun time for most institutional traders and big portfolio managers of any nature, typically ending out the summer, start to get back towards their desks, as we'll see probably increased volatility, increased volume, and whether or not any of these chart patterns have any true legs to stand on, in my opinion. USD opposites, and now we're right at the edge. Just remember, we haven't seen these lows in the euro. We have the 30th of March here, obviously, but we're right at the edge. So this is just like the upside down or inverse of the dollar chart. GBP, not as much weakness as the euro. Still have really strong support in this 36.77 area. CAD, no surprise, we're up against obviously strengthening dollar in relation to the Canadian. Little bit of a resistance here at this 2650-ish area. Let's see. CAD JPY for the request I just got. Keep in mind, this is a daily chart. Each of these candles represents a single day. So 86.63 ultimately, which is almost support from 2 moving averages and a Bollinger Band area, but this whole 85.40-ish area, this is the edge of the cliff for now. Obviously, this one's a little more difficult to foretell what's going to happen, because you're really going to have to see the relationships between the Canadian and the US dollar, and then separately yen dollar relationships, which I'm actually going to take a look at next, before I think you could sort of move into this cross, if you will. So here's the US dollar. Yen, again, holding support. This whole area between the very bottom of at least squeeze zone support, 108.50-ish area, and then obviously the area that has posed more recent support right at the 109 area. Edge of the cliff here, 107.40-ish area. So if we go back to CAD JPY, take a closer look at, which is what appearing to be somewhat of a head and shoulders pattern over the daily. Let's take a look at weekly, see if we can glean anything from that. Support's pretty much just the same area on the weekly chart here. And we definitely have some overhead resistance at 88.40-ish area. Get back to the daily. Yeah, so same resistance on the upside containing us. A lot of these currencies are building very tight ranges that could be somewhat thought of as coiling. Sometimes you have, in many cases, I would expect probably some fairly significant breakout from a lot of these coiling patterns. Problem with that type of prognostication is that I don't know when, how, for how long, but breaking out of these, regardless of whether I'm right or wrong on the time or the duration, the key is that you really want to trade much lighter. And as a manual trader, once you have a lot of these international breaks from these areas and currencies, why? Just very simply, things are a little more wild. You have a lot less win rates statistically, so it's best to take a lot less trades or accept a lot less trades from the software. Let's take a look at the Neo currency here, GBP CAD. Again, very tight range, just like I've talked about, so forth. Anything else I want to note here? That's pretty much it there. Question was just asked, AUD, NZD, 100 plus pip move in a short amount of time on Monday. Let's take a look at that. The pair got deleted off my chart. Anything that is NZD related can always has the propensity for wildness. So even though, and actually I'm going to drop down to a 4 hour on this one. I want to see what took place. It could be an anticipation of some of this policy statement stuff, which isn't coming out till tonight. Double check this time zone wherever you guys live as well. Don't rely on my time zones. But looking at just these 4 hours, most of the moves took place very much into Monday. I don't really see any news on that, but one was looking at these moves. Wouldn't be a surprise just from a standpoint of look at all the dojis that are placed in front of us, right? So the more that you have a build of, and these aren't all perfect, you know, some of these are don't really qualify, but you have a lot of complacency that's building. See that? So it wouldn't be a surprise, dude, especially in potentially in advance of some monetary events coming later today, to see a quick move to sort of clean house, if you will. So I always, whenever, and regardless of the time frame, this doesn't necessarily have to be, you know, just something it carries a lot more weight when these are daily candles, right? But if you were looking at this over a 4 hour period or 15 minutes or 1 hour, whatever the case is, especially in anticipation of potential news, this complacency, algos like to play games with that. So just know that it's going on. Know that there's stops above and below, right? And that you had a full engulfer candle here on the daily that engulfed the entire last, what do we look at, 7 days? So that engulfer essentially we went up and cleaned house both up and down, right? So what does that mean for somebody that's manually trading? Well, typically, if I understand these parameters and I have a good feel for what led up to potential volatility, I may be more inclined to hold as we sort of clean house up and down. And then it begins to fall back into a normal trading range from that. So if we take a look also at and this is a good example of, we came right up against the Bollinger Bands, and notice this area held, just strictly looking at the band. Don't worry about anything else, support, resistance, what have you, any other type of, but see just the stretch of the move. This is another reason I use these bands. They would have helped me stay in this trade if I was going for a short right here, which inevitably we came up against a very stretched, on a 4 hour, I would have stayed in the trade, gotten some clawback, as we move back inside the range. I don't know that I would have pressed this much more than that. This would be a great retracement that took place if one was able to catch it on the higher end of the short. Just based on a Bollinger, this is almost exclusively a trade. There's probably a bunch of other stuff right in here, obviously, but it's like the center point of the previous auctioning period, which could serve some purpose as far as a short taken in this area. But going up against that to the high, I'd be more interested in being short against this stretched move, looking for some sort of retrace. This would have been a longer hold time for me, more than a couple hours as we came back in. Once you get back into the muck, right, it's a lot less clear. It's a lot more difficult to trade. I probably would have exited most of the trade. Just to keep in mind. But to answer the question, the moves in opposite directions really is just cleaning house. This is much easier to see if I could illustrate this in the ES, which is the S&P 500 E-mini contract that trades in the CME, or what's called the Chicago Mercantile Exchange. It's more of an aggregated futures contract. It's much more liquid. It's much easier to see some of the stuff I discussed. I think eventually, if I can get the right team, which we're looking to generate the right team to have an additional trade room, it'll be more futures, equities, and options based. And some of the things that we talk a lot about here will be explained in a considerably deeper detail if one wishes to trade in those markets. But this is a great example of, and it doesn't really matter what the instrument is you're trading. It's really just understanding the patterns that play out as some wild move takes place. Now, if this is the futures markets today, and let's say all these candles are what the S&P 500 futures markets have been doing leading up to this, I would say, well, at some point we're going to have a house clean, meaning that the algos are recognizing that there's a lot of in-between trade. More in between trade you have, or more balancing or auctioning between a lower high point and a higher low point, the more there's builds up of pockets of stops. And these stop hunter programs are out there hunting for this stuff. You got to be aware of that as a trader and exploit that. So if this was a stop hunt program that went up and ripped the face off the shorts, so to speak, cleared the deck of all volumes sitting up there in any stops, those are almost always trades, even though they're counterintuitive, that I want to be on. It's what's called an outside in trade. So it takes a trade, goes way outside. You're expecting it to snap back inside. So you take that trade, just in case it would have worked out. This chart could be Apple Computer. This could be gold. It could be, the S&P mini contract. It could be any kind of currency. These are strictly what's called an outside in trade. There's a bazillion different names for it. It's a Bollinger Band trade, whatever. Point is that you're looking for it to go up and clear the deck, rip out all the stops, right? And many of the people that got short, like right here, towards which would have been arguably a real solid area to get short, they really took some heat, right? Many of them probably got stopped out if that in fact is the case, only to see the trade work. That's why I'm always more of an advocate of taking an outside in trade, something that just absolutely rips against the Bollinger. Maybe there could have been other areas of confluence up here in order to take that trade. Hopefully that brings some clarity into it. I've kind of came into it from the sort of the middle, but this is actually a pretty decent little teaching position. Hopefully I answer your question. Next question I had was in relation to gold, which I have not addressed yet. Let's take a closer look. This is GLD. Let's look at the daily first. So you notice volumes, again, smaller volume. Obviously, day is not finished today, but volumes haven't been anything crazy. We've had a big sell-off, some pretty solid support, as I've talked a lot about. This one's actually easier to see on the weekly chart. So big support down here, at just under 1,600 an ounce. It's been bought many times for a trade, pop back up. Many would see this going in a large flag pattern, breaking at some point up. Could move a lot faster than a lot think. I mean, look at the lows that were made here on the 16th of March, and obviously this is pandemic related. But look how fast we moved all the way back up to a serious store of value and a new high at the time, which we have not seen essentially for a year. So we've spent a year under the all-time highs building out and balancing. The spot market's similar. We'll do that on a daily. The reactionary low, this was definitely an outside the Bollinger Band trade, by the way. This happened a few days ago. I actually just noticed this. We were way outside the band. So we really could have taken this, would have been a real low risk long down here, just under 1,700. We would have had to catch this as a reactionary trade intraday due to some overblown, at least at the time they say, Federal Reserve says overblown inflationary news that snapped us down. Always makes for lower risk trades. Oil, see it here. I don't really have any prognostications on this. It's going to depend a lot upon continued reopenings of economies globally. If we take a look at the coinage, actually bear with me a second here. I'll log into Twitter. Follow a guy named Heinrich. It's actually a really good chartist. I saw a very good. Let's see if I can find it. Okay, here it is. Heinrich Zeberg. This guy's actually really good. He's one of the better chartists out there. He's over in the UK, runs a big fund. So, I'm not a wave guy. Okay, you know, I don't draw waves. I just follow people that have proven themselves to be fairly decent in wave analysis. Okay. The C down wave, regardless of how it gets drawn, is typically pretty vicious, and it catches a lot off guard. And this could be a chart for anything. I'm just straight out analysis here from our boy Heinrich. But yeah, there's going to be tells in here. A lot of this he gets into detail about just how the volume's playing out. So word to the wise, if you've were a buyer of crypto in some sort of form, any form, and you're taking some heat, you have an opportunity essentially to take some off the table, if in fact that you agree that this may or may not go down. Whether or not you agree with that doesn't necessarily amount to anything. Both myself and Heinrich could be dead wrong if we go for new highs. I don't see it. I would not plan for it. I would not be long riding it up. I'd rather look to see how something like this will play out. So food for thought on that front. What else? Tell you, man, this lumber chart really got a boy concerned. I'm building a house. I'm pumped for that, but they don't use a ton of lumber in Florida. They use a lot of block because of the water. But that's not an economy that's just roaring globally. It's just not. You know? And then everything else has just gone up because of the demands and the supply chain problems. I mean, look at the price of cotton, right? Textiles higher. Coffee, right? It's a crazy chart. Price of sugar. And this all seems really strange to be showing on a call that's related to software strategy session, but I think that you always need to be reading the tea leaves in this stuff. What else I want to address? Ethereum for the question I just got. similar to the Bitcoin, although I have no feel for where this is going or what have you. More than likely, it'll follow the Bitcoin if it does head lower. Global indices here. Equity still highs. A lot of the Europeans here. Notice the interesting break lower almost of emerging markets. So it's probably best viewed on a weekly chart, but seeing emerging markets right here, and this is the BRIC countries: Brazil, Russia, India, China. Probably the vast majority of this index, sort of like the S&P 500 of emerging markets, is what this EM is. This is always a good thing to look at to see what's going on in these. Now, no surprise, Communist Party of China has been cracking down tremendously on a lot of companies that even in some cases it owns a small minority of, and that has not bode well for anything in Baba Land or JD.com or anything related to commerce-based U.S. listed, or I should say, Chinese companies listed on U.S. exchanges. It's been difficult. At some point, if this BABA can get back down to high 120s, high 140s, when you can get some clarity from the CCP, which may never happen, the stock's just going to be a screaming buy at some point. All right. Show USD CHF for the question I just got. Daily. Same tight range has been building in a lot of this. Lost the USD. So notice this has been related to the NZD move to a lesser degree, but we've broke from these areas, now setting newer lows as the US dollar obviously has been rallying. Been in a downtrend since essentially about the middle of June in this currency pair. It's first time in a while since middle of June. We've touched the outside Bollingers, coming close. So if you're in a bunch of long trades down here and taking heat in whatever software that you accepted trades from or not, I hope that is not the case. I hope you're short this move. Probably going to be seeing some sort of snapback. Euro GBP back inside the range. It's getting a little scary down here for some. Pushed right back up inside the range. AUD. No surprise here. Euro's been strengthening. AUD has been weakening across most currencies. It is a bit wild. We'll have to keep an eye on this one. All right. I think that's pretty much everything I wanted to address. Hope to see you guys on the AP Live new software platform launch call tomorrow. Sign up. Everybody have a great trading week. This has been lots of fun. We're trying to host these calls at 10 a.m. on Tuesdays and Saturdays. Everybody have a great week. Go out and do something for somebody that you love. Share the value and love for trading. May trades be with you.